Hey, 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 hey. Hopefully we're all good. Let us see. Hey guys, what is up? It's Dusty here and welcome back to another episode of the Daily Crypto News, another Daily Crypto live stream. I am hoping that all is going to be good. Not 1,000% sure on all of this. Let me quickly see some settings if I can change them. Yeah, I think we're going to be fine with all of this. Should we keep it like this? You guys seem to enjoy the cat, so I'm going to keep it on there. I think that should definitely do the job. Hopefully you guys are all in the chat. I can't see anybody just quite yet, but I hope you guys are all here. Things are going interesting, to be honest with you. Things are a little bit more interesting than I expected over in the news. People are, as usual, going a little bit crazy on the matter. I guess that's usual, right? We often see things like this. We often see things like this, guys. Now, we are going to get ourselves the result in a couple of minutes. A couple of people have said they've already traded it perfectly. Now, from as far as I understand, there's nothing that has just happened, but let's quickly update. No, nothing has happened thus far. The result should be here within a couple of minutes. And again, what we're seeing, or what we're going to see, is the decision over in the US for the interest rate. So, it's going to be an interesting one. We're expecting 3.25 as a new number. So a rate hike of 0.75 or 75 basis points could be significantly more, as you guys probably understand. It could be significantly more, which would obviously be bad because of inflation. Could be significantly less, which, funny enough, would also not be too good. It just depends on a couple of different factors. Both sides are good, both sides are bad. You can understand from the bad side that the lower that they put the interest rate, the less basically preventative they're going to be for getting into a recession and to combat inflation. But the higher the number is, very logically is why I think you guys can all understand, well, the worse the recession they're kicking ourselves into, or us into. So both of those sides are awful. We have about 5 more minutes to go before we got ourselves that event. Guys, make sure you press that like button. We'll be greatly appreciated. What's up with the cat? What cat are you talking about, my friend? No idea what you're talking about. But yeah, we can maybe potentially actually look up an FOMC. Let me see, FOMC meeting live. Maybe there's actually any live recording of this now. I'm seeing a lot of people are talking about it. Let's see, is this the actual thing? Is this the actual event? 2:30 p.m. ET. Let me open it up on the side so I don't, get some sort of strike. Opening it up without sound. Give it a second. Nothing's happening. Is the FOMC meeting itself starting at 8? Or is the... I think so, right? Let's quickly check this back. So FOMC economic projections are at 8. Does that mean it started a half an hour ago, right? What is... But most likely, like 0.75 and less is good for crypto, most likely. 0.75 and up could be bad. And the 0.75 itself is a neutral number. Because it's expectation, for that reason I'm saying it's most likely going to be bullish. But traditionally, 0.75 is a crazy, ridiculous number, which is bearish. But I'm guessing the market is going to take this as a positive note, a positive tick, if we do end up seeing it. Let's quickly put up a couple of charts in front of ourselves, because you guys always appreciate that. Let's open up a fresh Bitcoin chart if we can with a 1 minute. And you guys usually also want to have a let's do 3 of them. Let's do with the dollar index, and we have, what do we want as well? What else do we got? Oh, look at, what do we want, guys? We have the dollar index in the middle. Let me put myself small. Let's put it like this. There we go. Okay, let's think about this. We want ourselves a Bitcoin chart. Boom. Dollar index. Boom. And a S&P. We can go for whatever. Doesn't matter too much. We got ourselves a couple of different things. Auto. There we go. Good enough. I think good enough. We can kind of numb it down, actually. Okay. This is the 1 minute chart for a couple of different pieces. We are prepared for this number to change. I'm going to actually do some other shenanigans, and I guess it doesn't matter which one we check, because you're going to see it move on here, and you're going to see it move over on the other side at the same time. So, I can make it smaller. I will do that, though. Never mind. I shouldn't talk too much. Let's open this, and let's add. Give me just a second. This to it. I guess this will do the job for right now. All right, so we got ourselves here. If this is refreshing or all of a sudden there's a crazy pop, we know something changed. For now, though, we just have to wait. All right, guys, make sure you all press that like button. We have officially got 2 more minutes to go. It can be a little bit longer. I'm not exactly sure if this number is always on time or not. We'll see in just a second. Let me know if you guys are bullish or bearish. What do you guys all expect? Just say in the chat box real quick. Bullish, bearish, bullish, bearish. Oh, you guys are saying put up an XRP chart open. I think this will be fine. Do we need an XRP chart? Or will I'll put it actually maybe here. So we have, again, I'll put it like this. Damn. There we go. Well, I guess you can also just open it like that. No, you're not going to see anything then. Whatever. The S&P is not that important. We'll keep the other stuff in there. The dollar index is interesting, and Bitcoin, I guess, is interesting. I don't think XRP is gonna be our main one to watch right here. Okay, 1 more minute officially. Ooh. Oh, Bitcoin pumping. Bitcoin pumping. Bitcoin pumping. People got their numbers. The most people got their numbers. S&P, Bitcoin pumping, dollar doing medium. Bitcoin pumping, guys. Pump it up. Pump it up. Almost $20,000. Bitcoin pump it up. Woo. Bitcoin pumping up, boys. Look at that. Ooh, instant dump. What are the numbers at? Come on. Update. Okay, calendar alert. U.S. interest rate projected at 3.9. 3.9 interest rate decision. Let's check it out. Exactly. Because I might have read it wrong. There's too much information here on the screen. Let's update this. Can't be, right? No, it can't be. That's too much. At 1 point, that's not 1.4. A different number we checked. Let's see what the actual number is going to be. It has to update. It's stuck. I think it might be stuck because too many people are refreshing this little piece of garbage ass website. Come on, website. Update your freaking thing. Okay. Come on. Why is it not updating? There we go. Oh, it's 3.25. So it was as expected, actually. Dang, why did this thing have to? I was like, what is happening? Bitcoin pumping. Wait, where's the Bitcoin pumping part? Oh, Bitcoin dumping. Ooh, Bitcoin dumping. Ooh. Ooh. God diggly damn. Holy smokes. S&P going down like a truck. Wow. So this is what we kind of expected, where most likely, as I said, right? Look back at my my little video from, I think, yesterday. Most likely this number comes out, pump dump is what the guy predicted, and I was kind of thinking the same thing. Happened exactly to that degree. It's a very negative result. Somebody says, I don't see a dump. I mean, it went down, Bitcoin went down 7% in 1 minute. 6%. I mean, you can go left or right, but it definitely did dump. I'm just going to share it on Twitter. Bitcoin dumped in see. Damn, what a Bitcoin movement, huh? 1 minute, 6.5% down. US dollar up a significant portion within a minute. And then the S&P still moving downwards, where Bitcoin is actually recovering ever so slightly. This is interesting to watch. What a funky candle. That is interesting. Hope no one just bought Bitcoin. Well, to be honest with you, this is the fun part. When you get a number that's exactly close to expectation, you sometimes get some crazy results. Let's see if this meeting is actually live right now. Wait, I'm seeing some dumbass video. What is this? This is not live. What is this? Am I being am I being trolled? Is somebody trolling me, or what's happening here? Or is this like a very important video where they're doing some introductory stuff? I mean, it says live, and I'm seeing some... what? One thing I know for sure is that that piece ain't live. Now, I'm going to say the majority of people was right, the 84%. Whoever the 16% was, you know, don't give them a raise, I guess, because they were not correct. Yeah, in terms of prices, that is interesting. XRP taking a back ever so slightly, down 5% where Bitcoin is up. XRP not doing so good over the last couple of minutes. S&P actually still going down rapidly over the last couple of hours. Look at that. It is down 1.3% within 8 minutes. And Bitcoin still, as of this point, is down roughly 5% over the last like 5 minutes or so. Wild. That's very wild. I'm just checking through to see what people are saying, but that was a wild little candle right there. Damn. All right, so who was right? Let's scroll up a little bit and see who was right with their bearish predictions. I saw people being pretty bullish just now. Let me see back. Who is right? They deserve a little. Okay, Brandon said bear. Congratulations to you. Catfish. You guys are also correct. Catfish. I'm assuming people said catfish when things were like, that things were looking good, but then went bad, right? I think your cat will dump. Yeah, most likely. Bearish, but would have loved to be bullish because I'm not a trader. You were also right, my friend. Adela said bearish. Yeah, a lot of you guys are actually right. Cattish, bearish. All right. You guys are right. The majority of you guys said bearish. So you guys will deserve a little clap for yourselves, all right? You guys will deserve a little clap for yourselves. I have a blanket, by the way. It is freaking 13 degrees or so. Tomorrow going back to Dubai, or maybe the day afterwards. Not 1,000% sure. If you guys are there, let's meet up before heading over to Singapore. Oh, Singapore is such an expensive country, though. What in the world? Like a hotel room is $1,000 a day? What in the world is that? Hey, Dusty, do you have XDC? Yeah. I hold XDC. Pretty good crypto, in my opinion. We're saying it because there's a cat on your head. Really? Where? I don't see it. By the way, guys, I told you all, I was having way too much fun with these filters. So I had a couple of different things, right? I also had this one, right? Don't get frightened now. Hey. I'm a little child. Yeah. All right. This is, I like this one. Yeah, it looks like the angry orange indeed. Huh? I'm loving this one. I like this. I don't think people are going to like me talking, you know, on stream like this, but it is kind of funny. But the cat is more fun, I guess. Stretching that cat on your head, huh? Can't see your face. Huh? People might take you less serious. I mean, we're not serious right now, to be honest. The big thing regarding the price already happened. There's nothing too much to be serious about here. If we wanted to be serious, we'd have a very serious note. I think this is kind of funny. We can make it funny, you know. There's nothing. We can just wait right now. That's all we can do. Bitcoin's price action is bearish. the majority of the market took it in bearish. But you can see one thing, and this is something a lot of people don't understand, that the reason that trading regarding a meeting like this is so hard is because very often you get such a volatile time. I'm not talking such a negative or bullish time, I'm talking volatile time, where very often you get some sort of stop loss hunter. You can see here, before the price moved down 6%, it moved up 2.5, meaning let's say that we did what we talked about before, right? Where you, for example, open up a short and a long position at any given time here, which is a strategy that's actually not a bad idea. You would have to place your stop loss at a significant point, like for example, -3 or something like that, maybe a 1 to 2 ratio of 3 to 6% then or something like that, which is significantly hard because otherwise you'd just be easily stopped out. What I mean with that is, let's say, again, we look at the origin number, let's say right here at roughly around $19.5 thousand per Bitcoin. If we then had a stop loss at what? We would have needed to have about 3%. We still need a profit margin of above 3% to make this work. So we could go for, let's say, for example, 3. Let's go for 4% then, because that would have actually worked out. This is then what it would have looked like, right? At roughly 4% in this sense here, or 3%, sorry, and 4% that way. 4% that way. This is then again what a trading setup could have looked like. Now, the reason that this is so risky to execute regarding such a very important type of meeting is because very often these will get stopped out. Usually you'd want about a 1% or something like that, something along those lines type of stop loss in these types of cases, but it's just nearly impossible to go for that. Because you never know as well if it's going to actually move more than 3% or so. You might literally just get stopped out and then the price is going to move the other way, but again, the same percentage, meaning you lose twice or something like that. What's the expectation of the Fed? Again, the rate hike has been 0.75. It's been 75 basis points. All right? We know it. It's a fact. The consequences of this, I'd say, are neutral to bullish. I wouldn't necessarily call this a bearish event. 0.75 in terms of the number is great. It's very high. But it's, I think, the adequate number, the right number. I said as well, 75 is a iffy-wiffy type of point where most likely it's a pump dump, which is exactly what happened. But mostly bullish on the narrative. 75 or more is bearish, and below 75 is most likely bullish. But any one of them is bearish and bullish at the same time as of this point. The interest rate numbers are so ridiculously difficult. They messed up the money supply for such a long time, put in so much money into circulation. They knew this was going to happen. They knew they had to do it this way. But it's basically prolonging the inevitable of a sort of recession, or at least a negative time for the people, let's call it. And so regardless of what number they choose, it is not going to be nice for the economy. You know, it just isn't. So there really wasn't any good way to salvage this or save this if I had to think of anything. Somebody asked, should I keep my Ethereum? Well, why would you not keep your Ethereum? And Tommy, I'm going to make you a moderator, by the way. I'm not sure why you're not a moderator already. I thought you were. Is this a different Tommy? Not sure what happened. Tommy, are you the same guy? Oh, okay, you remember. Okay, good. There we go. Tommy's always here, man. Everybody. How many of you guys are always here? I see Bayfei or BV. You're always here, I notice, as well. Who else is always here, just checking by? Battle Sasaki stops by pretty often. I remember the name as well. Who else is here all the time? Let me see. Let's just put some, like, yes or no or something like that, so I remember you. Malik Media, I remember you from before as well. Jeddah, of course. Welcome back, my friend. What's up? XRP chart. I don't think the XRP chart is honestly too interesting. It's actually going down, literally. So unless you like negative movements like that, you can see the price just had an instant crazy dump. I'm not so sure actually what happened right here. I think this is just, yeah, this is the 8 o'clock moment. How much did it go down for? Let's see. It went down, yeah, similar to Bitcoin, about 6% within 1 minute a couple of minutes ago. In a similar fashion as Bitcoin did, in a similar fashion as most likely all the other cryptos did as well. And XRP, by the way, looks so negative because there was a pretty big outlier yesterday, right? We had a couple of very high price points for a little bit. It does not mean that XRP is actually doing quote-unquote bad. You can see here over on a 4-hour chart, XP's price was just pretty good yesterday, which is why it looks so negative. But in reality, oh, where is it now? But in reality, it's not actually down significantly, if you know what I mean. Like if we look, it's still an upwards moving momentum, you know. It's just that yesterday the price all of a sudden hit about 42.5 cents or so. It was just going all the way rampant. No cat. I can't see all. Okay, so yes or no cat. What do you guys think of it? Should we let go? Should we kill him or keep him? Sorry. Let him go to another owner or keep him? Sorry. Oh, maybe a little bit too rough. Alright. Cat leaves. We're going to the next thing. Which is my, hello. That's it. This is all it has. That's what the filter does. It's like, hello. That's about it. This one is a little bit more, easy, I think, right? I think there must be a way as well to, hey, wait, I can actually, wait, I have 30 FPS. Okay, let's see. Camera, mono, 1080p. Any cool stuff I can still change? Beauty. Should I put the beauty filter on? What's the Fed doing? What's the Fed doing? I don't think they're doing too much, to be honest with you. I think in about half an hour or 50 minutes we're gonna get ourselves a little talk, right? If I remember correctly, it takes about 15. I think it's about half an hour after the decision to get the juice. Let's go to the calendar. Let's check it back here. Well, what was the 3.9 that I was actually fuzzing about just now at that point? Oh, so 3.8, I think for Russia, right? No, this is 6 p.m. So I'm not so sure exactly what 3.9. Oh, interest rate projections, second year. So these projections are actually rather interesting, but I think we're going to hear more about it over in the 8:30 conference. So the projections are basically what they expect for the next couple of years to kind of numb it back down. But this basically means that they expect the interest rate to probably be significantly high within a year from now and a couple of years from now. They're basically making a next, let's say, 3-year plan to see how the interest rate is going to look over the next couple of years. And it's again, hello everybody, significantly bearish from the perspective that it's still significantly high. So even though this they're going to do to combat going into a heavy recession, it's still pretty negative on the price action, for anything. The Fed is having lunch, bro. It's hungry. Well, I guess that's indeed what's happening. Everything is dumping. Indeed, everything is not doing so well because these numbers came out, which is kind of illogical to a certain degree. Maybe it could also be because all the numbers next to it came out, you know, and all these projections are so significantly negative because a 4.6% projection for the next year, nobody can make that seem like a good thing, right? I'm not so sure if you guys... Where'd that sound come from? This video? That scared the crap out of me. But yeah, nobody can say that those numbers are looking amazing or anything like that. It's been another 0.75 rate hike for the third time. Yeah, things are not doing so well in the US, guys. Can't say more than that. How would a rate hike be bad for XRP? In literal sense, not. It's like it will just follow along with Bitcoin and it will be bad for everything that you're holding, basically. So even though it's not directly bad for XRP through the process of continuance, I guess, whatever you call this, it's going to be bad for everything. And so thus, for that reason, also bearish for XRP. I'm just trying to wait another 15 more minutes so we can actually get to the Fed explanation of why they've made these choices. The US interest rate is now the highest number since 2008. Can you imagine that? 2008 is the last time that we saw this. That we saw these numbers. Again, on the left we have a Bitcoin chart, on the middle XRP, and on the right an S&P. Things are not bullish right now, even though logically it should have been, But I'm guessing that the predictions for the next couple of years turn these prices down even more. That's just what makes the most amount of sense to me, that's what caught people off guard a little bit. They raised it 0.75. It's on the news already. Yeah, we know, my friend. I mean, yeah, it was announced about 17 minutes ago, my friend. We know. The Fed doesn't have years left. I'm having way too much fun with this stuff, guys. Maybe someone should take this stuff away from me, actually. I'm having way too much fun with the new filters. I've had these filters for a long time. I just never knew. All right? I never knew. That makes a man do some crazy stuff, I guess. You know, when you get power like this all of a sudden. And anybody wondering about XRP, there's not really much to talk about, to be honest, as of this point. So I have like a bazillion articles about it open. This is not about XRP. Let me quickly see. I think I have like a dozen or two different parts open. But honestly, the same situation still applies. You know, the whole situation is pretty strange. The SEC is still going for delaying tactics. We're all hoping for some eventual update, mostly from the judge's side, where she gives us one or two little decisions. Obviously, in terms of lawsuit, yeah, there's really not too much to tell you. We have October 18th, the major thing to wait for. And in the meantime, there's just a couple of small decisions regarding the amicus curiae, regarding the William Himmon documents and whatnot. But the SEC hiding stuff. Okay, and we also have the amicus curiae and hiding stuff. And the experts. 3 things we have kind of that we're still waiting for. What else can we say? You know, what else can we discuss? It's just a waiting game. And obviously the SEC is playing the game the way they want to. They're not really trying to let us in on any of these details. Somebody says SEC XRP pumping. Let's go for 1 minute. Yeah, it's coming back up. XRP is pumping, everybody. I mean, it's not up so much, but I guess it's doing a lot better than Bitcoin is, no? Wait a minute. This guy is right. XRP is up 6%. XRP is up 20% in the last 6. Wait a minute. This guy is right. Give him a medal, my friends. He predicted it. XRP is up 7. What is happening? What is happening? It is up 8% in 20 minutes. Why am I screaming like a little dumbass? Guys, what is going on? What's happening? Why is it up 9% within a couple of minutes? Wait, what? Somebody says, sorry, my man, had to empty my savings account or my savings little pocket. Well, what happened right there? Who did that? Which one of you was it? Was that a birthday present? Damn. Interesting. Look at the volume as well, huh? All of a sudden, crazy amount of FOMO. Most likely a lot of liquidations right there. Let's see for fun. Can we see, is there any good Twitter account that showcases liquidation still? I wonder, because of a almost 10% increase in a couple of minutes, if a lot of people got liquidated on this. Damn. Are you guys all still watching as well? If you guys are doing fine, make sure you press that like button. I'm noticing there's a couple of small errors in the video. I'm not so sure why it's buffering. On my end, everything is good. YouTube seems to be buffering, though. Are you guys noticing any buffering? Is all good? Insane crypto price swings. Yeah, and Bitcoin is also up roughly 2% over the last 20 minutes. And XRP is doing wild. Guys, let's continue on. The moment we crack 10%, we have to go for a little song. It's 10% in a couple of minutes. The moment we crack the 10% mark, we're going to have to go and sing a little bit, which is 41.8 cents. All right, that's what we have to achieve right now. Guys, XRP pumping? XRP pumping? Ooh, okay. XRP pumping? Guys? Ooh. Ooh, ooh, that was close. They almost caught me right there, right? It was the cat hat you said. That's indeed what caught it off guard or something like that. We're getting close, but I mean, it might take a couple more minutes. We don't, I mean, come on, I don't know necessarily. I mean, it's almost up 10% in a couple of minutes. What is this 20% in a couple of minutes? How could that be? Guys, 10% in a couple of minutes, 20 minutes, like 25. That is wild. You don't really see who had a long position open, my friend. You are one genius of a guy. 10%. Somebody says it's not going to stop. I'm sorry for not sticking true to the title. We still have 7 more minutes to go before the Fed is going to speak. Somebody says, thank you for getting rid of the cat. Was that it? Did the cat do all of this? What happened? I was about to throw something on the floor, guys. I was about to go crazy. I mean, the Bitcoin price was doing well, but, XP coming back down. I'm going to share the stream over in Telegram. I think this is kind of funny. If I can. Let's see if I can do that. How do I join my own stream like this? Oh, we have 300 people watching? That's awesome. Welcome, everybody. Welcome. A lot of you guys most likely are new, right? Or not? Welcome to the chat, everybody. Just going to try to share the stream over on our Twitter. I'm also looking at valuable stuff here so I don't break everything when things hit the fan. Damn, that is crazy, though. Lessa, what's up, my friend? Tommy says maybe it was the cat. Leave a like if you want. You want me to put on the cat hat again, see what happens? You want to see the prices dump again? I'm not so sure. I don't want to do that to you guys. You know, I'll keep it off. It's going to be okay. Maybe it was the... Wait a minute. Oh, I took the hand off. Maybe that was it. Say hello to me, Dusty. What's up, my friend? Now, you see? You see, guys? It's not... It can't last forever, guys. Good times don't always last forever. Good times don't always last forever. No! Coming back down. Okay, we crossed a little hill. I guess we went too crazy, huh? I had a book. I was about to throw in my monitor, you know, my little wide-ass screen. But no, I guess not. Maybe it's the new background, you know? I decided to go for a couple of different backgrounds every couple of videos to make sure you guys aren't bored with the little same pink, purplish little garbage. Decided to go for some new. Maybe that, or maybe I should go for a green background. There we go. We should incite the bullish vibes. Yeah, that is smart. That is 400 IQ. There we go. See, that's what get that exactly. Let's see. Is this good? Do I have to download this? Hey, green. Green. Hey, looking pretty green. Hey. This is also pretty green, huh? Or like this. It's also pretty green. I'm not sure if you guys can see the green, though. But yeah, XRP pumping up again. No, it's not. I mean, the moment it goes above 10 cents, we'll see. All right. Daddy want the new Samsung Odyssey G9. I think I got myself I got 2 of them. I got one Odyssey G9 and one Aegon AOC, whatever. The 49 inches or I think, whatever it is. The big one, the ultra wide or something like that. It's good. Best for crypto stuff. It's best. Very nice, guys. Somebody says XRP 51 cents. I'm not sure what currency you're looking at, my friend. Cardano also moving. Screw the S&P, by the way. I'm going to get rid of it. Who cares? Who cares about stocks, right? Who cares about stocks, am I right? Oh, Cardano is also... But Cardano has the hard fork tomorrow, right? It's up about 4.5% over the last half hour. Look, H-bar, damn. Okay, guys, spot the crypto market. Which coin is moving up the most in the last couple of minutes? Let's check it out. H-bar is up roughly, okay, 3.6%. You disappointed me, my friend. You disappointed me. You let me down just now. All right, don't ever do that again. Cardano's doing even better than H-bar. Which is the craziest coin that just did the craziest move? Cardano has a crazy amount of green candles in a row, though. On Binance, only a 5.1% swing up down. Huh. Okay, we have about 2 more minutes until the Fed meeting starts. So I guess we'll just kind of look at both at the same time, you know? Get ourselves a little chart or two going, maybe one of XRP or Bitcoin, and then we also will talk about what the dog doing, what the Fed doing, you know? Let's see if we got some already. I think it's going to start exactly 30, right? And then even then, it's going to be a slow process because usually these meetings take a little while and there's a lot of boring stuff for the majority of you guys. But I usually listen to them anyway. You know, I think it's important. The run might have ended. Cardano looking a little bit even juicier than XRP right now. What is that? Yeah, I'm not sure what else to tell you guys. I was gonna go absolutely crazy. I was about to throw this little thing into my screen to have some fun, but I don't think it's gonna be necessary. Yeah, I know, XRP disappointing. Look at this garbage price movement, guys. It is only up about 7% in the last 20 minutes or so. What is this? What is this garbage? What is this cryptocurrency? It's only up. What is this? 7.3% in the last half hour. That's really garbage. Damn. Nah, I'm disappointed. What was this volume all of a sudden? Wait a minute. I don't even have volume on these. Yeah, so it's for XRP specifically that it had a lot of volume all of a sudden that specific minute. Somebody all of a sudden decided to put a little bit of money inside, huh? Interesting. With Cardano, you can see a very big amount of movement over on the logical volatility candle around 8 o'clock exactly. But for XRP, it's a little bit different. Meeting started. Okay, let's check it out. I'm changing it a little bit, okay? Give me a sec. Are you guys hearing no sound? What's going on? Are, uh, uh, computer might be dying, guys. I'm watching this on my second screen, but I'm not sure I can. Oh wait, it's just my. Wait, what? What's happening? Oh, we good. We good.
Pressures remain evident across a broad.
Can you guys hear this or no? Guys, what? For me, it shows that you guys can hear him. What?
But that is not ground.
Let me look up away. Let me see. Let me see. Let me see. You guys are saying no sound? You guys say no sound? I'll fix it. Don't worry about it, my friends. You guys say no sound? I trust y'all. I trust the majority of y'all in this sense. Somebody says, so I'll trust that you guys aren't trolling me. Let me see. Desktop audio. Let's see what happens if I press this. Let's see what happens.
Confirming the stance of monetary.
Let's keep trying some stuff.
Over coming months,
Working?
we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%.
Okay, L, okay.
We anticipate that ongoing increases
Yes?
in the target points this year. At some point, as the stance of monetary
Okay, just going through my mic. There's something wrong. I'll keep this on for now.
While we assess how our cumulative policy adjustments are affecting the economy and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year, 1 percentage point higher than projected in June. The median projection rises to 4.6% at the end of next year and declines to 2.9% by the end of 2025, still above the median estimate of its longer run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth, and there will very likely be some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We will keep at it until we're confident the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Let's go. Let's go. I think this is good enough. 10% up on XRP, guys. Bitcoin pumping. Things are doing good. People are excited. We don't know why, because I was fixing my sound.
Gina Smiley from the New York Times. I wonder if you could give us a little detail around how you'll know when to slow down these rate increases and how you'll eventually know when to.
I messed up, guys. So sorry.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%, and we will keep at it until the job is done. So the way we're thinking about this is the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular. To achieve a period of growth below trend and also some softening in labor market conditions to foster a better balance between demand and supply in the labor market. So on the first, committee's forecasts and those of most outside forecasters do show growth running below its longer run potential this year and next year. On the second though, so far there's only modest evidence that the labor market is cooling off. Job openings are down a bit. As you know, quits are off their all-time highs. There's some signs that some wage measures may be flattening out, but not moving up. Payroll gains have moderated, but not much. And in light of the high inflation we're seeing, we think we'll need to, and in light of what I just said, we think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time. So what will we be looking at, I guess, is your question. So we'll be looking at a few things. First, we'll want to see growth continuing to run below trend. We'll want to see movements in the labor market showing a return to a better balance between supply and demand. And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%. So that's what we'll be looking for. In terms of reducing rates, I think we'd want to be very confident that inflation is moving back down to 2%. Before we would consider that.
There is sound now, but it's
thank you, Mr.
through my
Chairman. Steve Lee from
microphone.
CNBC. Can you talk about how you factor in the variable lags on inflation and the extent to which the outlook for rates should be seen as linear in the sense that you keep raising rates, or can you envision a time when there's a pause to kind of look at what has been wrought in the economy from the rate increases? Thank you.
Sure. So, of course, monetary policy does famously work with long and variable lags. The way I think of it is our policy decisions affect financial conditions immediately. In fact, financial conditions have usually been affected well before we actually announce our decisions. Then changes in financial conditions begin to affect economic activity fairly quickly, within a few months. But it's likely to take some time to see the full effects of changing financial conditions on inflation. So we are very much mindful for that, and that's why I noted in my opening remarks that at some point, as the stance of policy tightens further, it will become appropriate to slow the pace of rate hikes while we assess how our cumulative policy adjustments are affecting the economy and inflation. So that's how we think about that. Your second question, sorry, was?
Is there a point in time you can see pausing? Is it linear? Do you keep raising rates, or is there? Oh, I'm sorry. I should know better than to not talk with my microphone.
I should know better than to answer your second question.
Oh, there you go. Is it linear? Do you keep raising rates, or is there a pause that you could envision where you kind of figure out what has happened to the economy and give time to catch up in the real economy, the rate increase time to catch up with the real economy? Thank you.
So I think it's very hard to say with precise certainty the way this is going to unfold. As I mentioned, what we think we need to do and should do is to move our policy rate to a restrictive level that's restrictive enough to bring inflation down to 2%, where we have confidence of that. And what you see in the SEP numbers is people's views as of today, as of this meeting, as to the kind of levels that will be appropriate. Now those will evolve over time, and I think we'll we'll just have to see how that goes. There is a possibility certainly that we would go to a certain level that we're confident in and stay there for a time. But we're not at that level. Clearly today we've just moved, I think, probably into the very lowest level of what might be restrictive. And certainly in my view and in the view of the committee, there's a ways to go.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. The projections show the unemployment rate rising to 4.4% next year. And historically, that kind of rise in the unemployment rate would typically bring a recession with it. Should we interpret that to mean no soft landing? And is that kind of rise necessary to get inflation down?
Right. So you're right. In the SEP, there's what I would characterize as a relatively modest increase in the unemployment rate from a historical perspective, given the expected decline in inflation. Now, why is that? So really, that is what we generally expect, because we see the current situation as outside of historical experience in a number of ways, and I'll mention a couple of those. First, and you know these, but first, job openings are incredibly high relative to the number of people looking for work. It's plausible, I'll say, that job openings could come down significantly, and they need to, without as much of an increase in unemployment as has happened in earlier historical episodes. So that's one thing. In addition, in this cycle, longer run inflation expectations have generally been fairly well anchored. As I've said, there's no basis for complacency there, but to the extent that continues to be the case, that should make it easier to restore price stability. And I guess the third thing I would point to that's different this time is that part of this inflation is caused by this series of supply shocks that we've had, beginning with the pandemic and really with the reopening of the economy, and more recently amplified and added to by Russia's invasion of Ukraine, have all contributed to the sharp increase in inflation. So these are the kinds of events that are not really seen in prior business cycles. And in principle, if those things start to get better, and we do see some evidence of the beginnings of that, it's not much more than that, but it's good to see that. For example, commodity prices look like they may have peaked for now. Supply chain disruptions are beginning to resolve. Those developments, if sustained, could help ease the pressures on inflation. So let me just say how much these factors will turn out to really matter in this sequence of events, it remains to be seen. We have always understood that restoring price stability while achieving a relatively modest decline, a rather increase in unemployment, and a soft landing would be very challenging. And we don't know. No one knows whether this process will lead to a recession, or if so, how significant that recession would be. That's going to depend on how quickly wage and price inflation pressures come down, whether expectations remain anchored, and whether, also do we get more labor supply, which would help as well. In addition, the chances of a soft landing are likely to diminish to the extent that policy needs to be more restrictive or restrictive for longer. Nonetheless, we're committed to getting inflation back down to 2% because we think that a failure to restore price stability would mean far greater pain later on.
Are vacancies still at the top of your list in terms of understanding the labor market and how much room there is there?
Yes, vacancies are still almost 2-to-1 ratio to unemployed people. That and quits are really very good ways to look at how tight the labor market is and how different it is from other cycles, where generally the unemployment rate itself is the single best indicator. We think those things have for quite a time now really added value in terms of understanding where the labor market is.
Nick Timmeros of the Wall Street Journal. You said not too long ago in describing the policy destination, there's still a way to go, but I imagine you have to have some idea about how you're thinking about your destination, whether it's a stopping point or a pausing point. And so I was wondering if you could discuss how you are thinking about, as the data come in, where that destination is, how it's moving up if inflation doesn't perform as you expect. Do you want to have a policy rate that's above the underlying inflation rate, for example? And do you have an estimate for where you think the underlying inflation rate might be in the economy right now?
Well, so again, we believe that we need to raise our policy stance overall to a level that is restrictive, and by that I mean is meaningfully putting meaningful downward pressure on inflation. That's what we need to see in the stance of policy. We also know that there are long and variable lengths, particularly as they relate to inflation. So it's a challenging assessment. So what do you look at? You look at broader financial conditions, as you know. You look at where rates are, real and nominal in some cases. You look at credit spreads. You look at financial conditions indexes.
The Kraken CEO just stepped down.
And you see this this is something we talked about today in the meeting and talk about in all of our meetings. And you see this, I think, in the committee forecast. You want to be at a place where real rates are positive across the entire yield curve. And I think that would be the case if you look at the numbers that we're writing down and think about, you measure those against some sort of forward-looking assessment of inflation expectations. I think you would see at that time, you'd see positive real rates across the yield curve, and that is also an important consideration.
Hi, Howard Schneider with Reuters. Thanks for the opportunity. I just want to be clear on this. You say it's meeting by meeting, but it sure looks like we're going 75, 50, 25. Is 75 next month the baseline?
So
Listen.
we make one decision per meeting, and the decision we made today was to raise the federal funds rate by 75. You're right that the median for the year end suggests another 125 basis points in rate increases, but there's another fairly large group that saw 100 basis points addition to where we are today. So that would be 25 basis points less. So we're going to make that decision at the meeting. We didn't make that decision today. We didn't vote on that. I would say that we're committed to getting to a restrictive level of for the federal funds rate and getting there pretty quickly, and that's what we're thinking about.
So just as a follow-up to that, I'm wondering about the sort of risk management considerations here. Given there's some discussion now of overdoing it, what's the incentive to continue front-loading right now? Is it lack of progress on inflation seen in the CPI reports? Or is it a motivation to get as much done while the job market is still as strong as it is?
So what we've seen is inflation our expectation has been that we would begin to see inflation come down, largely because of supply side healing. By now, we would have thought that we would have seen some of that. We haven't. We have seen some supply side healing, but inflation has not really come down. If you look at core PCE inflation, which is a good measure of where inflation is running now, if you look at it on a 3, 6, and 12-month trailing annualized basis, you'll see that inflation is at 4.8%, 4.5%, and 4.8%. So that's a pretty good summary of where we are with inflation, and that's not where we expected or wanted to be. So what that tells us is that we need to continue, and we can keep doing these, and we did today do another large increase as we approach the level that we think we need to get to. And we're still discovering what that level is, but people are writing that down in their SEP where they think policy needs to be. So that's how we're thinking about it.
Let's go to Colby. Thank you. Colby Smith from the Financial Times. Chair Powell, how should we interpret the fact that core inflation is still not forecast in the SEP to be back to target in 2025, and yet the dot plot projects cuts as early as 2024? And does that mean there's a level of inflation above the 2% target that the Fed is willing to tolerate?
So I guess core is at 2.1 in 2025, and in the median, and headline is at 2.0. So that's pretty close. I mean, we write down our forecasts and we figure out what the median is and we publish it. So it's not. I mean, I would say that if the economy followed this path, this would be a pretty good outcome. But you're right, it is a tenth higher than 2%.
Okay, just as a quick follow-up, I mean, if the concern is that underlying inflation is becoming more entrenched perhaps each month, then why forego the more aggressive 100 basis point increase today? And does that risk having to do more later on?
Yeah, so we, as we said, at the last press conference and in between that one and this one, we said that we would make our decision based on the overall data coming in. So if you remember, we got a surprisingly low reading in July, and then a surprisingly high reading for August. So I think you have to, you can't really, you never want to overreact too much to any one data point. So if you look at them together, and as I just mentioned, if you really look at this year's inflation, 3, 6, and 12-month trailing, you see inflation is running too high. It's running 4.5% or above. You don't need to know much more than that. If that's the one thing you know that this committee is committed to getting to a meaningfully restrictive stance of policy and staying there until we feel confident that inflation is coming down. And that's how we think about it.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask about the balance sheet. You all have left open the possibility that you might sell mortgage-backed securities, but we've seen significant slowing in the housing market. Mortgage rates have gone up significantly, and I'm just wondering whether conditions there might affect your plans for how quickly you have the runoff on the MBS side.
So what we said, as you know, was that we would consider that once balance sheet runoff is well underway. I would say it's not something we're considering right now, and not something I expect to be considering in the near term. It's just it's something I think we will turn to, but the time for turning to it has not come and is not close.
Well, and will conditions in the housing market affect that decision?
I think a number of things might affect that decision, but the main thing is we're not considering that decision, and I don't expect that we will anytime soon.
Neil.
Thanks. Neil Irwin with Axios. A number of commentators have come to the view, and including over at the World Bank, that simultaneous global tightening around the world creates a risk of a global recession that's worse than is necessary to bring inflation down. How do you see that risk? How do you think of coordination with your fellow central bankers? And is there much risk of overdoing it on a global level?
So we actually, my colleagues and I, a number of my FOMC colleagues and I just got back from one of our frequent trips to Basel, Switzerland, to meet with other senior central bank officials from around the world. We are in pretty regular contact, and we exchange. Of course, we all serve a domestic mandate, domestic objectives, in our case, the dual mandate, maximum employment price stability. But we regularly discuss what we're seeing in terms of our own economy and international spillovers. And it's a very ongoing, constant kind of a process. So we are very aware of what's going on in other economies around the world and what that means for us and vice versa. The forecast that we put together, that our staff puts together and that we put together on our own, always try to take all of that into account. I mean, I can't say that we do it perfectly, but it's not as if we don't think about the policy decisions, monetary policy and otherwise, the economic developments that are taking place in major economies that can have an effect on the U.S. economy. That is very much baked into our own forecast and our own understanding of the U.S. economy as best we can. It won't be perfect. So, I don't see it's hard to talk about collaboration in a world where people have very different levels of interest rates. If you remember, there were coordinated cuts and raises and things like that at various times, but really we're in very different situations. But I will tell you, our contact is more or less ongoing, and it's not coordination, but there's a lot of information sharing, and we all, I think, are informed by what other important economies that are important to the United States are doing.
Craig Torres from Bloomberg. Chair Powell, you talked about some ways the higher interest rates are affecting the economy, but we've also seen a resilient labor market with durable consumption, strong corporate profits. And I'm wondering what your story is on the resilience of the economy.
What is this?
You and your colleagues said, well, we started tightening in March when we were talking about interest rates in the future, and indeed, Treasury rates moved up, so we should have had a lot of tightening taking effect. Why is the economy, in your view, so resilient, and does it mean that we might need a possibly higher terminal rate?
You're right. Of course, the labor market in particular has been very strong. But there are the sectors of the economy that are most interest rate sensitive are certainly showing the effects of our tightening. And of course, the obvious example is housing, where you see declining activity and of all different kinds.
It's
and,
there, Mike.
Housing price increases moving down. So we're having an effect on interest sensitive spending. I think through exchange rates, we're having an effect on exports and imports. I think so. All of that's happening. But you're right. It's just, and we've said this. This is a strong, robust economy. People have savings on their balance sheet from the period when they couldn't spend and where they were getting government transfers. There's still very significant savings out there, although not as much at the lower end of the income spectrum, but still some savings out there to support growth. The states are very flush with cash, so there's a good reason to think that this will continue to be a reasonably strong economy. Now the data sort of are showing that growth is going to be below trend this year. We think of trend as being about 1.8% or in that range. We're forecasting growth well below that, and most forecasters are. But you're right. There's certainly a possibility that growth can be stronger than that, and that's a good thing because that means the economy will be more resistant to a significant downturn. But of course we are focused on the thing I started with, which is getting inflation back down to 2%. We can't fail to do that. If we were to fail to do that, that would be the thing that would be most painful for the people that we serve. So for now, that has to be our overarching focus. And you see that, I think, in the SEP, in the levels of rates that we'll be moving to reasonably quickly, assuming things turn out roughly in line with the SEP. So that's how we think about it.
Fair enough. Boring, but okay. He doesn't say a lot, to be honest.
In
No.
a world of euphemisms that we live in here with below trend growth and a modest increase in unemployment, I'm wondering if I could ask you a couple of direct questions for the American people. Do the odds now favor, given where you are and where you're going with interest rates, favor a recession? 4.4% unemployment is about 1.3 million jobs. Is that acceptable job loss? And then given that the data you look at is backward looking and the lags in your policy are forward looking and you don't know what they are, how will you know, or will you know, if you've gone too far?
So I don't know what the odds are. I think that there's a very high likelihood that we'll have a period of what I've mentioned is below trend growth, by which I mean much lower growth, and we're seeing that now. So the median forecast, I think, this year for among my colleagues and me was 0.2% growth. So that's very slow growth, and then below trend next year. I think the median was 1.2, also well below. So that's a slower. That's a very slow level of growth, and it could give rise to increases in unemployment. But I think that is something that we think we need to have, and we think we need to have softer labor market conditions as well. We're never going to say that there are too many people working, but the real point is this: inflation. What we hear from people when we meet with them is that they really are suffering from inflation, and if we want to set ourselves up, really light the way to another period of a very strong labor market, we have got to get inflation behind us. I wish there were a painless way to do that. There isn't. So what we need to do is get rates up to the point where we're putting meaningful downward pressure on inflation, and that's what we're doing. And we certainly don't hope. We certainly haven't given up the idea that we can have a relatively modest increase in unemployment. Nonetheless, we need to complete this task.
Well, how will you know, or will you know, if you've gone too far?
It's hard to hypothetically deal with that question. I mean, our really tight focus now continues to be ongoing rate increases to get the policy rate up where it needs to be. And as I said, you can look at this SEP as today's estimate of where we think those rates would be. Of course, they will evolve over time.
I wanted to follow up with what you just mentioned about the labor market. You've said several times that to have the labor market we want, we need price stability, and you've suggested maybe there isn't a trade-off in the long run. But in the short run, there is a lot of concern, as people have been expressing here, about higher unemployment as a result of these rate hikes, or as a result of rate hikes. So can you explain, though, what about high inflation now threatens the job market? I mean, you seem to suggest that inflation, high inflation will eventually lead to a weaker job market. So can you spell that out a little more for the general public and how that would work?
So for starters, people are seeing their wage increases, their wage increases eaten up by inflation. So if your family is one where you spend most of your paycheck, every paycheck cycle, on gas, food, transportation, clothing, basics of life, and prices go up the way they've been going up, you're in trouble right away. You don't have a cushion, and this is very painful for people at the lower end of the income and wealth spectrum. So that's what we're hearing from people is, it very much that inflation is really hurting. So how do we get rid of inflation? And as I mentioned, it would be nice if there were, a way to just wish it away, but there isn't. We have to get supply and demand back into alignment. And the way we do that is by slowing the economy. Hopefully we do that by slowing the economy, and we see some softening in labor market conditions, and we see a big contribution from supply side improvements and things like that, but none of that is guaranteed. In any case, our job is to deliver price stability, and I think you can think of price stability as an asset that just delivers large benefits to society over a long period of time. We really saw that for a long time. The United States had 2% inflation, didn't move around much, and that was enormously beneficial to the public that we serve. And we have to get back to that and keep it for another long period of time. To pull back from the task of doing that is you're just postponing. The record shows that if you postpone that, the delay is only likely to lead to more pain. So I think we're moving to do what we need to do and do our jobs, and that's what you see us doing.
Thank you for taking the question, Mr. Chairman. Edward Lawrence for Fox Business. So you had said that Americans and businesses need to feel some economic pain as we go forward. How long from here should Americans be prepared for that economic pain?
How long? I mean, it really depends on how long it takes for wages and more than that, prices to come down, for inflation to come down. And what you see in our projections today is that inflation moves down significantly over the course of next year, and then more the next year after that. And I think once you're on that path, that's a good thing, and things will start to feel better to people. They'll feel lower inflation. They'll feel that the economy's improving, and also if our projections are close to right, you will see that that the costs in unemployment they're meaningful, and they're certainly very meaningful to the people who lose their jobs, and we talk about that in our meetings quite a lot. But at the same time, we'd be setting the economy up for another long period. This era has been noted for very long expansions. We've had 3 of the 4 longest in measured history since we got inflation under control, and that's not an accident. So when inflation is low and stable, you can have these 9, 10, 11, 10-year expansions, and you can see what we saw in 2018, 19, and 20, which was very low unemployment, the biggest wage gains going to people at the low end of the spectrum, the smallest racial gaps that we've seen in since we started keeping track of that. So we want to get back to that, but to get there, we're going to have to get supply and demand back in alignment, and that's going to take tight monetary policy for a period of time.
As a follow-up, what is that economic pain in your mind? Is it job losses? Is it higher interest rates on credit cards? What is that economic pain?
So it's all of those things. Higher interest rates, slower growth, and a softening labor market are all painful for the public that we serve. But they're not as painful as failing to restore price stability and then having to come back and do it, down the road again, and doing it at a time when actually now people have really come to expect high inflation. If the concept of high inflation becomes entrenched in people's economic thinking about their decisions, then sort of getting back to price stability, the cost of getting back to price stability just rises. And so we want to avoid that. We want to act aggressively now and get this job done and keep at it until it's done.
Nicole from CNN. Thank you, Chairman Powell. Nicole Goodkind, CNN Business. Existing home sales have fallen for 7 months straight. Mortgage rates are at their highest level since 2008. Yet mortgage demand increased this week, and housing prices are still elevated. Now, at the end of your June press conference, you mentioned plans to reset the housing market. I was wondering if you could elaborate on what you mean when you say reset and what you think it will take to actually get there.
So when I say reset, I'm not looking at a particular specific, set of data or anything. What I'm really saying is that we've had a time of a red hot housing market all over the country where, famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues though with the housing market, as you know, where it's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots and workers and materials and things like that. But from a sort of business cycle standpoint, this difficult correction should put the housing market back into better balance.
Make sure you press that like button, guys.
Shelter made up such a large part of this hot CPI report that we saw. Do you think that there is a lag and that we will see that come down in the coming months, or do you think that there's still this imbalance that needs to be addressed?
I think that shelter inflation is going to remain high for some time. We're looking for it to come down, but it's not exactly clear when that will happen. So it may take some time. So I think hope for the best, plan for the worst. So I think on shelter inflation, you've just got to assume that it's going to remain pretty high for a while.
Okay, we'll go to Jean for the last question. Hi, Jean Young with Market News. You've talked about the need to get real rates into positive territory, and you said earlier that policy is just moving into that territory now. So I'm curious, how restrictive is rates at 4.6% expected? Is that expected to be next year? How restrictive?
So I think if you look, when we get to, let's assume we do get to that level, which I think is likely, what you're going to do is you're going to adjust that for some forward-looking measure of inflation, and that could be, you pick your measure. It could be, there are all kinds of different things you can pick, and but what you'll get is a positive number. In all cases, you will get forward inflation expectations in the short term, I think, that are going to be, assuming that we're doing our jobs appropriately, that will be significant. So you'll have a positive federal funds rate at that point, which could be 1% or so. But I don't know exactly what it would be, but it would be significantly positive when we get to that level. And let me say, we've written down what we think is a plausible path for the federal funds rate. The path that we actually execute will be enough. It will be enough to restore price stability. So this is something that, as you can see, they've moved up, and we're going to continue to watch incoming data and the evolving outlook and ask ourselves whether our policy is in the right place as we go. Thank you very much.
Okay, you guys can't listen to that music anymore. Maybe it's gonna mess us up. So yeah, halfway through I fixed my stuff. Let me quickly say, though, before all you guys leave, make sure you press that like button if you liked it. There were a couple things wrong, but let's do a quick little summary, even though the majority of what he said is kind of useless, to be honest with you. You know, I'll go over exactly what I mean with that in just a second. Also, guys, we're going to do these live streams every single month, plus a lot more. If you're enjoying this crypto stuff, make sure you subscribe to the channel. That's all I'm saying. So, a little quick summary of what he said is, well, the same as he always says. Right now, the prices are pumping, most likely because we expected exactly these words. He says, well, most likely things are going to get a lot worse, but we're going to fix it eventually. We have these negative expectations over the next couple of months. It's been put that the interest rate will have to increase over the next couple of months. Anyway, we all know it. However, right, the way we're going to fix it, this is literally what's kind of funny about it. The way we're going to fix it, it kind of depends on how bad things get. We do know that things will get worse, and the only thing is we don't want it to get too bad where things are too bad. Yeah, you guys understand, right? So what is he actually changing in my opinion right now? Nothing. He didn't really state any numbers that I'm surprised by. He didn't really state any tactics that I'm surprised by. They asked the most general questions like, okay, what are you thinking? What has changed? Why this? Why that? Where literally every decision has to be made. Literally every decision that they asked about, he cannot answer. So he literally said like, well, we'll decide next time, or well, we'll decide when the time comes, or yada, yada, yada. And for the rest, everything, why is everything pumping all of a sudden? The speech ends, boom, pump. What is going on? What is going on right there? But he literally gave no answers to anything that I didn't know yet. I can't positively say that we learned something from this entire speech unless you were just not paying attention to all the numbers. What is happening all of a sudden? Why is the S&P pumping so much? And XRP and whatnot are on the similar course. Why? Why? What's happening? No pump on Binance? Well, I'd like to disagree and say it's most likely pumping everywhere. What's happening? Look at that, guys. Retest for Bitcoin, huh? Little retest. Why is this in my screen? Oh, you guys can't see that. It's in my screen, bugging out. Not sure what that's happening. Let's keep this one open, I guess. Trading calendar. Yeah, we have the numbers already. The Fed conference is done. We have a couple more decisions coming later, but nobody cares about any of those. I guess one of the ones that's interesting is the interest rate decision in the UAE. You know, obviously because I live there, that's kind of interesting to me. But honestly, it's not going to make too much of an effect on the prices, I am assuming, as of this point. The most interesting part is surely going to be where things are going to go over the next couple of minutes. And in terms of summary, I think that's literally the majority of what you needed to hear. 0.75, it's going to increase by another like 1% over the next couple of months. Will it be 75, 0.5, and 0.25 or something like that? It's hard to say. It's very hard to say. But I can surely pick this up as a neutral event. There's a couple of bullish factors. There's a couple of bearish factors. We can't make it easier than that. We can't. Retest it. Sure. We'll accept it. Whenever I do this, guys, you guys can't see it, but then the previous, like the below tab, this one keeps showing up whenever I attempt. Let me put this one back in. So we'll not have that annoyance anymore. There we go. Bobby says only $99.60 left to go. And by the way, for anybody saying that there's no pump after the speech, if there's going to be some sort of pump, we'll most likely have to have it at like the moment. You have to explain how to hit the like button like BitBoy. I think people know how to press the like button. No, I'm not going to. You just go click right there. Nah, man, if you don't know how to press it, never mind then. It's good. You know what? Never mind that. We'll accept it. We'll accept that. I need to order some food, guys, because it's going to get late. And otherwise, I will not be able to eat anything. But yeah, in terms of results, I can't say I'm happy. I can't say I'm negative on this one. I'm surely going to be watching the markets, and most likely I'll get you guys another update later today. I still have content for VeChain, still have content for Cardano, still have content for XRP, still have content for Hedera, still have content for another interesting thing you guys are going to hear about later, a decentralized exchange that I'm working with, I should say. I'm loving that, so I'm going to share a couple of different things about how to use it maybe or what. But damn, what an interesting day. What an interesting day. I didn't expect this result. I expected the pump and dump, but I didn't expect the pump and dump and pump and dump. I didn't expect it to happen like this. And by the way, for all my loyal stream viewers, I sent a email to, I think, about 10 people by now. None of them responded. John Dean did not respond. Jeremy Hogan did not respond. And the majority of the guys I sent an email, nobody responded. So for an interview or for some sort of live stream or some sort of video, none of them wanted to do it. Not sure if they're too busy or just not willing to do it. Doesn't matter. You know, I tried, right? So I'm mostly going to try again in a couple of days, send a couple of different messages. But let's just assume they don't want to be on the show, guys. So I tried for y'all. But that's the result for us at this point. All right? Just know, I tried. But they never responded. None of them did. So it's hard. All right? It's hard. Just know. Skip directly to 75 basis points next month. Probably it will still be 75 basis points, honestly. I don't see any reason for it not to be that way. I'm expecting it's going to be, again, another one of those. Looks most logical. Let's say it like that. Yeah. I'm going to have to order another. I'm going to order some. I don't know. Maybe like a pizza or something. But yeah. In terms of content, guys, that was it for this little stream. Hopefully you guys all enjoyed it, though. Next couple of days, I might do another stream tomorrow, and then I might be flying off, so I'm not going to have the big screen, the big PC, anything. I'm going to have the stupid laptop again, so I might not be going for live streams. But I surely got a lot of cool content coming up. So guys, make sure you subscribe to the channel for a lot of cool stuff coming up the next couple of months, weeks, days, whatever, hours, who knows. And also, whenever you watch a video of mine, make sure you press that like button. It is greatly appreciated. Now, you know, if I don't get enough likes, I cannot go back home, you know. So make me proud, make my family proud. Thank you guys so much for stopping by, saying hi. And I'll see you guys again in another stream, all right? It was interesting. Mark did some crazy shenanigans. We'll talk about it later today in another video. So stick around in the channel, and I'll see you guys again in another one.